Hello, everyone. My name is Mo Zulfiqar, and welcome to another episode of Income Investors. We have been off for a few weeks at this point, but we didn't go anywhere. We were right here, but just working on our content and figuring out how to make our channel better. We have been listening to all the feedbacks we have been getting over the past few years, and just wanted to let you know that in coming weeks and month, you'll see a slight shift in our content. Yes, we will keep talking about high yielding dividend stocks, but at the same time, we will also talk about, what's happening in the overall economy, interest rates, and any new development in the world of finance. Because we personally believe that you can't just do one and ignore the other. They're both correlated. With that said, with me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. When it comes to stocks, people are more inclined to invest in some stocks and avoid others. So-called sin stocks like gambling, tobacco, cannabis, adult entertainment, and aerospace and defense are the kind of companies that many investors avoid for ethical reasons. Then there are other investors who want to make money regardless, and there is some evidence to support those who include sin stocks like Smith Wesson's Brand Inc. They're traded on NASDAQ under symbol SWBI in their portfolio. Despite the stigma of being unethical or socially dubious, many sin stocks are also excellent defensive plays that perform well whether the economy is growing or we are in a recession. That's because when times are good or bad, people will spend money on alcohol and tobacco. Lots of people, love to gamble, and others ensure their families are safe. There are maybe negative public opinion about sin stocks, but ultimately it's up to investors to decide what they want in their portfolio. John, what can you tell us about Smith and Wesson's company?
Yeah, thanks, Mo. Smith and Wesson might be in the aerospace and defense industry, but when it comes right down to it, most people think of it as a company that sells personal firearms, and they aren't wrong. The company designs, manufactures, and sells firearms. This includes pistols, revolvers, and long guns. And this includes like modern sporting rifles, pistol caliber carbines, and level action rifles. It also sells things like handcuffs, suppressors, and other firearm related products and accessories.
And if we go into the numbers, it reported better than expected fiscal first quarter results.
Yeah, now for the first quarter of fiscal 2026, ended July 31st, 2025, Smith& Wesson announced that net sales slipped to 3.7% on an annual basis to $85.1 million. Now, that might not sound great, but that's far better than management's previous forecast of an expected 10% decline. The company reported first quarter net loss of $3.4 million, or a loss of 8 cents per share. Adjusted net loss was $3.4 million, or 8 cents per diluted share. Gross margin was actually 25.9%. Compared to 27.4% in the same prior year period. Now, looking ahead, management said that it expects a normal seasonal environment, resulting in second quarter sales to grow significantly over the first quarter and to come in at approximately 3 to 5% below the second quarter of fiscal 2025.
And something that income investors really want to know, this company maintained its quarterly dividend of 13 cents per share.
Yeah, now Smith& Wesson has been around since 1852, but it's only been paying a dividend since recently, like 2020. So it doesn't have a long dividend history to hang its hat on. That said, in that short period of time, it has raised it 4 times from 5 cents per share to 13 cents per share. Now, it last paid a quarterly dividend of 13 cents per share on October 2nd. This works out to an annual distribution of 52 cents per share for a forward high yield distribution yield of 5.25%. And to put that in perspective, that dividend yield is more than twice the current rate of inflation.
And looking at the SWBI stock, it has a 60% upside potential.
Yeah, now a dividend yield of 5% may not sound that big, but it's attached to a stock that has been outpacing the broader market over the last few months. Investors responded favorably to Smith Wesson's better than expected first quarter results, sending SWBI stock up more than 25%, and it is, for the most part, held on to those gains since then. Despite the big moves, SWBI stock has bigger upside in the cards, with Wall Street analysts providing a 12-month share price forecast range of $12 to $16 per share.
John, thank you so much for your insights. Since stocks like Smith and Wesson Brands may not be for everybody, but it's a great company for investors who like strong earnings and a reliable growing dividend. It reported better than expected first quarter results with the strong sales coming from new products, which accounted for 37.3% of sales and a big increase in core handgun shipments. Those tailwinds should persist with a strong pipeline of new products that should be good for that should be good news for both retail investors and the 237 institutional investors that hold 53.8% of all outstanding shares. Those institutions not scared off sin stocks include BlackRock, Dimensional Fund Advisors, Vanguard Group, and Goldman Sachs. That's it for today. And make sure to go to incomeinvestors.com now to read more about what John writes on a regular basis. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.